Hello guys, in this series we're going to talk about CSR, Corporate Social Responsibility. Now let's begin. Okay, first of all, what exactly is corporate social responsibility? Now, it is said here that it's a kind of self-regulating business model. Now, self-regulating in the sense like it's something that you imposed it on yourself. You do it to yourself, you want to do it. So it's a self-regulating business model. So no one is actually forcing it onto you. So you are deciding to adopt this social responsibility to make yourself, and often it's a company, that's why it's called corporate social responsibility, to become more socially accountable. And who are you being accountable to? You're accountable to your stakeholders, you're accountable to the public. Now, what drives a company to be more socially responsible? So why adopt a CSR? So why do you want to be more socially responsible? Now, we can actually explain this from this Gray Owen Adams 7 positions of social responsibility. Now, I'm not going to discuss all the 7 positions, but I would like to look at 4 of the positions. 2 positions are pro-capital, 2 positions are pro-social. So pro-capital means they are more inclined to profits. Now let's just look at the pro-capital position. It's all about profits. Now we have one position called pristine capitalist. That this is a position that we just want to maximize returns for our shareholder. So it's all about profit, 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 nothing except profit. So the stance is basically no social responsibility unless it is required by law. So because we know CSR is often not a legal requirement, so anything that does not it's not required by law, we're not going to do because it's going to reduce our profit. Now, in fact, it's always said that when you adopt a CSR strategy, you're actually costing companies money. And that's like stealing the money of the shareholder. Now, the second position is slightly better, but it's still profit-oriented. It's called expedient. Okay, expedient. Now, this is where the company will become more selective in terms of their CSR strategies. So we try to focus at those strategies that can bring long-term benefits to the companies. So, for example, if you believe that investing in CSR strategies can improve reputation of the business and will bring a lot more sales in the future, you want to do that. Now, that is an example of CSR strategies that can bring long-term benefits. Now, we often call this kind of CSR strategies as strategic CSR. Now, what about those positions that you're not so oriented to look at profit? So what drives you now is not profit, but it's more about stakeholders. It's genuinely that you're more concerned of your stakeholders, you're more concerned with your public, you're more concerned with customers, employees, and so on. Now, we have one position here called social contract. The social contract basically explains that we cannot exist unless we get the support of our stakeholders. So we're always in this contractual relationship. That's why it's called a social contract. So a contractual relationship with the people, in the sense that we must produce desirable effects wanted by our stakeholders. And in return, we will get license from these stakeholders to allow us to remain in business. So it's a license for our existence. Now, we often come across the term called corporate citizenship. So you as a company is given or granted a citizenship by your stakeholder because of what you're able to do. So you need this support from them. That's why the contractual relationship is we'll do something that they want. In return, we'll get license from them, permitting our existence. Now, the other position is called social ecologist, which has a higher degree of social responsibility that basically we commit into social actions voluntarily. It's simply because we feel responsible to do so. It's not because we're doing it because we need the support. Even when the support is given without the social action, we will still do it. Now, so this explains what drives a company into adopting CSR strategies. So as a director or as a CEO, as a member of the board, we often will come to decide what is our position. So are we in a pro-capital position or are we in the pro-social position? Now, it's all depending on the culture of the people behind leading the business. Okay, let's just move on. So if we look at CSR and we know that this is about how we become more socially accountable. Now, what exactly is the impact of all these CSR strategies going to be? Now, there's many ways of how we look into it, and one way is to look from the concept called sustainability. So if you recall this term called sustainable development, it's about how we want to develop our business in a way that we satisfy our own needs, but we will not compromise the future generations to satisfy theirs. And this sustainability concept will touch on three things which we normally call the triple bottom line. It's focusing at economic, social, environmental sustainabilities, or sometimes you hear people call it as profit, people, and planet. So how do you measure this kind of sustainability? Now let's start with measuring economy. Now economy is kind of straightforward. It's usually looking at the financial aspects, the profitability aspects, and the returns. It's often talking about how as a company you're able to generate return for your shareholders. So most of the time we are already in economic sustainability, where we are talking about things like financial reports, measuring profits, measuring your PE, measuring your dividend yield and stuff like that. Now, so we will not focus too much onto that. Now, what about measuring social? We will look at things that concern people, like are you creating jobs? Are you respecting human rights? Now, we are concerned with issues like child labor. Are you paying your staff fairly? Are you paying them at a rate that is reasonable? Or are you abusing them with a low pay? Now, are you investing in human capital, like giving them training, giving them development? You know, a lot of things that concern human, like discrimination, human rights, freedom to do associations or having unions. These are all social. So all that focus at the social aspects. Now, what about measuring environmental sustainability? So we're looking at whether your activity is actually causing damage to the environment. And if, let's say, it does, what is it that you're doing to mitigate that damage? Is there any actions or strategies that you're currently adopting which conserve or preserve the environment? Now, so these will always be the two aspects that we focus at, which is social, environmental. So let's dive deeper. So the whole idea that we're going to see, it's footprint. Now, we can talk about social footprint, environmental footprint. Now, so what is exactly a footprint? Footprint is basically the effects or the impact that you've left behind. So I've given you on the screen the definition of an environmental footprint. It's the effect of a person or a company or your activity or anything on the environment. That's why it's called an environmental footprint. For example, the amount of natural resources that you've consumed, the amount of emission that you've produced. Now, how do you know your footprint? So I'm going to use example of an environmental footprint, and you will use the same concepts to apply them into social footprint. Now, we normally need to identify the input elements, the output elements. That means we need to ask ourselves, in our business activity, what comes in and what goes out from our business activities. That, for example, in the manufacturing of your business, or for example, in your agriculture business in plantation, what comes in? You need water, you need fertilizer, you need soil, you need energy to run your machines and so on. Now, what comes out? For example, the use of fertilizers could create a lot of pollution because the effluents in your water will actually goes to the river and then it contaminates the river. Now that's the output element. Now, but whatever that we've identified, we have to measure them. So the whole idea of environmental footprint is to know exactly what comes in, what goes out, and quantify them. So we can call that as environmental audit. So environmental audit is more of a systematic approach for us to identify and quantify this kind of footprints. Okay, if you know your footprints, you know all these kind of issues concerns your activities to the environment. Likewise, we say it can be the same for social. Just that social footprint is how the impact or the effects of our activities on the people. Now, we can have footprint that can be positive. We can have footprint that is negative. So if you recall in the example I've given in the class, like if you're going to start a business like casino. Now, casino may be good in terms of creation of jobs. That's a positive footprint. Now, but casino may be not good in terms of it increases the level of crime. Now, that's a negative social footprint. Okay. Now, so you can apply the same concept to social, like what we've discussed with environment. So how do you communicate to people about all these kind of footprints that you have? Because eventually, if you don't tell people, no one will know whether you're doing a good job or not doing a good job. So one way that we're going to do is we produce reports. Now, there are many types of reports out there, and because these are all not regulated reports, so it's really up to the companies, a voluntary measure, in publishing this kind of reports. Now, you will study integrated reports separately as a chapter, but we have companies that actually produce sustainability report. There are companies that they just want to be more focused, so they produce environmental report. Now, because all these are not regulated report, they are not like financial statements where you have a standard format you have to follow, because these are reports that they are not regulated. So how do you exactly prepare them? Now, we have this thing called GRI, Global Reporting Initiative. They come up with a framework for sustainability reporting. So they are basically suggesting that if you do want to produce this kind of report, sustainability report or environmental report or social report, whatever names you call them, they suggest that your report will normally need to have all these things. For example, your report will have sections that cover strategies and analysis. Like for example, what are your short, medium, long-term goals in terms of what you're pursuing? So if you're talking about environmental, so what is your short-term strategies concern environment, medium, long-term? And what exactly do you intend to do? What do you see as your major risk, your limitation? Now, that's where strategy analysis will come in. So it's to set a context for reader to understand exactly your journey in terms of environment. Now, you normally will have a section in the report concerns governance. Now, governance will normally covers the people. So who are the people that you've actually appointed? The directors, for example. Are they executive, non-executive? What are their role? Who is the chairman of the committee? What authority do you give it to them? How do I contact them? So if I want to speak to one of these directors concern your environmental footprint, who can I go to and how do I do that? Now, you can find from the report under these aspects, governance. Now, you need to have proper use of presentation techniques like have graphs, have charts, have pictures, have descriptions, and you must be able to show trend. For example, you compare the level of your water usage, energy usage this year with the past, let's say 2020 with 2019, 2018. You can compare your actual results with your target results. You can give them your future forecast how much reduction in energy or water usage there's going to be. Now, and of course, all these things you need to present them in a measured results, or we call them performance indicators. So you do have to list down things that you want to communicate to your stakeholders. Now, these are the main thing. Now, of course, the GRI also say that the report must have a content page so that it navigate through people through the reports, that which page will be able to get what kind of information. But the main thing will be what you see on the screen. Now, that's how we actually communicate to our user. Now, the use of these kind of reports is going to be so flexible and so powerful, in the sense that we can communicate so much. It's not just our own performance. You can also communicate things that concerns performance of others. For example, when we talk about environmental footprint, our footprint may be not just our own footprint, but can be the footprint of our supplier, footprint of our customers, and we can have all that being measured and presented in our reports. Okay, let's talk about our own. So if you, as a corporate body, that you want to tell people that you are actually actively doing a lot to take care of your own environmental footprint. Now, one of the easier way to show people that you're doing that is to have EMS. What's EMS? An environmental management system. So it's about managing your own footprint. It's not the footprint of others, but your own. So an environmental management system is a set of processes, practices that enable you to reduce your environmental impact, which is footprint. And there are many types of example of EMS, and one of the international one is ISO 14001. Now, why would you want to have this kind of environmental management systems accreditation? But there's lots and lots of benefits being claimed. Now, I'm just going to list some to you. For example, that you can maintain customers' contract. Now, there are some customers that they are more environmental concerned customers, that they don't buy from suppliers unless they have accredited EMS, because this gives them assurance that they are buying from suppliers that they take care of the environment. So you might need that, especially when we're dealing with the European side, the US side kind of customers, that the environmental awareness is very high. Now, it's also a way of demonstrating your commitment to environmental sustainability. See, if you want to tell people that, hey, my company is really taking care of the environment, but question is how do you prove that? Now, you can prove it through your accredited EMS. Now, it's about how we enhance reputation. It's again image, showing to people that your companies, that you're concerned with the environment. Now, it helps to reduce insurance costs. You see, what happens is when insurance want to come and cover certain kind of risks for you, they normally will take into account how do you mitigate the risk. And this brings me to the fifth point, is part of risk management. Because having an EMS will also include how do you deal with, for example, accidents, environmental accidents, like if there's a spillage. How are you going to manage that? Are you prepared? So we call this is emergency preparedness. So usually when you have EMS, your systems will naturally include all that. So you will become more proactive in the risk management, and that will help you to reduce your insurance costs. So if you want to apply EMS, now I'm going to show you a chart here which shows you the process of how you can get your EMS accreditation, which is the same that we've seen or we've discussed before in our notes. So as you can see, first of all, you wanted to get accreditation, so you should inform your competent body that, hey, we have that intention. Now, then we usually begin out with an initial environmental review. But the process is to determine your existing environmental footprint. You cannot improve yourself, or you cannot improve your environmental performance unless you know your footprint. So you start off with an initial review. Now then come up with an environmental policy. How do you want to save on your footprint? For example, to save electricity. Now I'm just giving something very simple for you to understand. So like to save electricity, so we decide that we'll not turn on the aircon until 11 o'clock and we'll switch it off after what time. We will try to recycle our water. We try to minimize our wastage. That's an example of environmental policy. Now then you will have this be implemented. Of course, when you've implemented all the systems, you've come up with all the new standards of your SOP, standards of procedures, the way you do things, the new assets or new equipment that you install. The next thing is, are you achieving the results that you want? So you need to do a check. So this check here is basically an environmental audit that will help you to measure your performance. Now, of course, then once you're able to check, you're able to measure so-called variance. You know exactly what's your actual performance. You can measure against your target and see whether you're achieving it or not. If not, then you can plan actions for continuous performance. Now, this is a very simple model of plan, do, check, and act model. So to get your accreditation, it's as simple as that. Okay, then of course you see that this process come out, produce an environmental report, which we have discussed with you, example of what you can have in the environmental report. Then you're ready for accreditation, so you will invite the environmental verifiers to come to visit you to validate all the things that you've said, that you've done, and if they're happy with it, they'll give you the registration and you will then be able to use the logo. Right, so this is basically a very simple video in a very short and fast way to look through the respects of CSR for your syllabus. So again, I hope it helps you to recall things that we've learned. Thank you very much. Happy revising. Bye-bye.